So here we go, rocking and rolling 50 pips. So it looks like the fourth update of the day, 3rd of July 2015. Not making any trade calls or recommendations because you're responsible for the trades you may decide to take. And the fact you're in here means you're ready to understand, you accept all the disclaimers here on the website, and we're also understand that we're just performing some live technical analysis in a learning context for educational purposes only. So how's everybody doing? Good stuff, good stuff, good stuff. Can everybody hear me okay? You can use the green little check mark to let me know sounds okay. Usually when you get this funky stuff happening on the Adobe, the best thing is just to make sure you've got the latest version of Flash, or just reinstall that, and it tends to work out okay. So what's going on here? Well, again, we've got a fairly choppy afternoon, a bit of a dead market, not a lot going on. US traders on holiday. Everybody's kind of waiting for the wires. We don't know what could come out of Greece at any moments. We would expect some kind of rhetoric to build up and more comments to hit the wires as we potentially get towards the latter part of the day. So it's a tricky one, right? Overall, it's a day where there's not an awful lot of edge. So again, we're here. We've got some time. We'll start to look at some charts. If anybody has anything they desperately want to look at, shoot, we'll go through it. I don't have anything particular on the agenda. We did a full review this morning, so it's up on YouTube. It's up on the blog. We looked at various different charts, various different pairs. So if anybody missed that, you can always go back on that and get a feel for that. If there are any pairs which you have any questions on which we didn't look at, feel free to ask. We'll go through it. If you have any other questions like the Q&A, you can just shoot away, use the Q&A box. I mean, I don't think there's that much. I don't know what else we discuss, because we discussed the charts and we discussed I got through most of the questions. I mean, some charts we didn't look at is what's going on the S&P, right? What's happening here on the SPOOs. So we see that we've been talking about this for a long time, right? So effectively, pretty much since the beginning of the year, right? Even the back end of last year, we've discussed about the fact that we've been as long as nothing changes, the grind higher is firmly in play, and unless there's something substantial in terms of rates, most likely people will be more than happy to buy the dip. Now, having said that, we're not fans of buying highs or buying continuation at highs, so we've been tactically looking for opportunities to sell failures at highs, right? An easy way to look at that, or an easy way to talk through that is simply looking, you see all these 1 hour reversals at highs, negative closes at highs, market attempts to take out new highs, bam, comes out, all these failures, clearly. So we think that the velocity of move will likely come to the downside as long as we're failing at highs, and if anything, the velocity to the upside will come after a big dip, because we suspect that, globally speaking, the market will still continue to be relatively supported. Okay, so right here, what are we looking for in terms of what we would dub a healthy correction? Well, really anything all the way back down into those 1900s, 1950 to 1950, 1900 would still be a healthy correction. Right here, that 21,000 has been very pivotal, and we've seen a lot of interesting action right here in terms of pressure to the downside. And right now, what we're looking at is, as we discussed for the NASDAQ or most of the other charts, it's the focus is that Monday range, right? After we put in that big day when we had the gap down at the beginning of the week, and as long as we stay inside that range, most likely we'll see a lot of chop with not an awful lot of traction either side until we try and break up. Now, what's interesting is that even if we fill the gap, we would expect to see a lot of sellers coming in at the 2100, right? And if we break below those lows in terms of a gap down, then we would expect to see basically the 2000 print fairly quickly, right? Keep in mind that in terms of event risk on the Greeks, I think in terms of the equity side, a no vote would clearly spell a possibility of some kind of a gap down hard on the equity side. So, you know, it depends how hard is hard, you know. Uh, but again, if it's hard, you know, it could be in that 1950s, 1900, it could even be in the 1800s, right? We don't know, but clearly there's a risk of a hard gap down, right? So we'll have to see, but it looks like it's trying to turn. Now, something which I wanted to discuss, which I think is an important discussion, whether you're somebody who's trying to look for asymmetric risk reward, if you're trying to play tight, you have to understand that that is a valid argument as long as you can control your risk and your reward, right? And that you can control that by a TP or by a stop loss, even a mental stop if you want. It doesn't matter. But you need to be able to control that. Now, what happens over the weekend? Now, over the weekend, you have gap risk, right? The Monday night, Sunday night, whatever you want to call it, gap risk. So that means you have to understand that even if you think you're taking a defined risk play, you're not really, because you don't control the open. So what that means more concretely is that if last Friday you said, well, I'm going to take a tight play, I'm going to get long, and you know, I think this could pop into the, and my risk is just going to be below the low of the day, that's not a defined risk trade, even though you have your stop in, because you can't control the gap. You're going to get filled on your stop where that market opens, right? So you have to keep that in mind. So even though you may think you have some kind of defined risk reward, you don't. And especially for, we don't have to have a massive gap, but for newer traders who haven't seen these kind of opens or big gap up and down, you know, there's nothing crazy about 200-300 pip gap up or gap down. It can happen, right? Even bigger. So what you have to understand is that that's why people, or probably more experienced traders, are telling you there's not an awful lot of edge trying to trade over the weekend, right? Because you may think your stop is 100 and your TP is 300. You may think whatever, but you simply don't know. Does that make sense? So your risk is defined, your profit is defined as long as the market is open and as long as you don't have some kind of flash crash. But be very careful over the weekend because you don't know what's going to happen. So overall, there's no point risking everything on one trade, right? And there's no point putting you in a situation where you're going to spend the whole weekend worrying about how we're going to open in the gap. If you want to have a position on over the weekend, you can, but there's not a lot of point in having a stop in there, right? And if you're going to do that, you have to make sure you really know what you're doing, and you have to make sure you trade small enough to be able to withstand the risk no matter what happens, right? Nobody's it's not like it can't move more than a couple of standard deviations. You don't know. Okay? Does that make sense to everybody? Okay, so David, is it possible to do a review on a past short-term trade on, say, a 15-minute chart? Well, why don't you, again, the technicals, David, whether you're looking on a 1 hour, 15-minute, or a daily or a monthly, the technicals are exactly the same, right? So the context is very different. So let's just do something just for funsies, right? Because I was going to use a less politically correct term. Now, if you're trying to get short a negative close at new highs, it's the same trigger and the same kind of mechanics that is going to apply whether you're looking at a monthly whether you're looking at a weekly, whether you're looking at right here at a daily, right? So it doesn't really matter. Now, if you want to look at a 15-minute chart, I'm more than happy to look at a 15-minute chart, but understand that the technicals are not specifically going to change. Okay, so we can look at a 15-minute chart on euro, for example. So what's going on a 15-minute chart on euro, right? So basically, let's just look at the week, right? We close on Friday. We gap down, okay? You have to let these settle. What do we know after the weekend? It's you don't want to try and get in straight away. It's much better to let these settle. So if you're trying to fade these, it's much better to wait for a higher time frame kind of close rather than try and jump on these straight away. So what I would have waited for is a close on the 4-hour, nothing later after such a big gap. You know, and if you got long on the 4-hour, that was a very nice little long for a retracement back up or a gap fill. Okay, now if you're just trying to stay on the 15-minute, as we discussed earlier, what would you do? Well, all of a sudden we've put in a low, bam. Okay, so lows put in, we see this try to pop back higher, get sold off, and as we're starting to go into London, etc., right? What's happening here? This is pretty much that whole support zone from the gap area that has been set, right? Lower end of the range pretty much. As we go into London, price comes back, holds the support zone. So once we know we've held the support zone, what do we expect? Again, taking the context out of play, we expect the hold to signify most probably price to try and test back on the opposite side of the range, which would be, or the recent highs, which would be Friday's highs, or at least gap fill, right? So let's just extend this here. So what does price do? Comes right back in. No sellers at all. Thin market, hit stops, bam, breaks higher and fails to hold above and comes right back down. The moment it comes back down, what does it mean? That now these two are the two key areas to keep an eye out for the rest of the week. Okay? So this becomes the big level to the upside to watch. To the downside, we'd keep an eye on those Friday highs. All of a sudden, it's giving you some kind of top end of the range. What's the assumption right now? The assumption is that after it's come back down inside the broad range that we've put in on that big day, again, if you missed it, we discussed it in detail in the first outlook, is any move back in and failure to break above, you would expect the opposite side of the range to get tested, or at the very least, a good attempt for mid-range. Okay? Price comes back down. Does it bounce here, the first attempt in the middle of nowhere? No, it's coming back towards mid-range. Mid-range players start to come in. It attempts to bounce, fails to hold above, comes back down below, and now is just hovering stuck at mid-range. Why? Because nothing really has changed. So is it surprising that we're trotting around hovering at mid-range? No, because this was the big oops moment. We set in a broader range and now nothing has changed, so we have to wait. So now even on a gap up or gap down over the weekend on Sunday, unless we trade outside of these highs, outside of these lows, it's likely just going to be a lot of chop inside this range. Now, can you trade inside this range? Of course, but the chances are there's very little edge in trying to do that. Does that make sense? Again, we talked about that in the initial update, right? So we'll have to see. We'll have to see what happens. Yeah, you know, in terms of other charts, there's not an awful lot. What I would do is whatever chart you're looking at, keep an eye out for, you know, that big ranges that were set on Monday. Now, what else has happened? Could somebody tell me? We talked about we talked about 3 key things in the first update when we look at the charts. We talked about 3 key charts. Can anybody tell me what those 3 charts were? Let's see if anybody was paying attention. Let's see if anybody's still awake while I have a drink. Euro, yes. 1 down, 2 to go. We just reviewed Euro again. There's 2 more charts we looked at. Rick in the house, Luca in the house. So Aussie, right? We looked, the ones, Debbie, man, that's good. Also, right, we looked at pretty much, we're looking at those. We focused on that Euro, cable, Aussie, right? And what we say, so on cable also, we said that the path of least resistance was likely a move back to the upside, and then we got sold, and we're pretty much stuck at that mid-range, right? And we said there's not an awful lot of trading this range, but if anything, those high in that level, as we're doing the first review, gun to the head, the only trade is a long, really, right? Popped about 20, 30 pips, now is hovering, doing nothing. The other chart we said was Aussie, right? And what do we say about Aussie? Is as much as that support zone is interesting, on a dead market like today with not an awful lot of liquidity, you would expect the path of least resistance, the path of pain, to continue. And that means that it's just so utterly tempting for the market to try and take out those stops below that range, number one, but even more importantly, back below the 7500, right? So if we go back and we look at that Aussie on a famous or infamous 15-minute chart, tried to base, and when we started talking, what did we say? There's no edge trying to catch it. There's no edge. You have to understand the context and what's going on. Slow grind lower, and everybody's being stubborn trying to catch this, in trouble. Tried to get long with a wide stop, in trouble, right? As we said, the context is important. So what's going on? Does it, because it's trying to hold here, does it make sense to try and get long Aussie? Now again, I'm looking for possible longs on Aussie, but you have to understand, when nobody's pulling the trigger, when there's not an awful lot of volume, when the market is dead, the path of least resistance is to try and take out that 7500. So even if that 7500 holds from a closing basis, even if we close relatively close to it, there's a good chance that we'll try and gap down and take that out. Understanding the context, as we said, is number one, highlighting the chart as we did in the morning, highlighting the key levels as we did in the morning, highlighting the risk that is for continued grind lower. Don't get in trouble trying to catch this going down as we did this morning. And remember that there's going to be a rate decision on Tuesday, right? As we did this morning, and understand that we got that gap opening possibility. So the edge here, or the opportunity here, if anything, 8 times out of 10 will be in the Monday, Tuesday range, not today. Does that mean you have to get, because this is the assumption, you want to get aggressively short looking for that 7500 to get clipped today? Maybe. You'd have to shoot me and I still wouldn't trade that, because the velocity of the risk is for some kind of squeeze too. So what that just brings back to the initial discussion, there's not an awful lot of edge. Remember, look, the better you get at trading, the more experience you get, you'll realize that you will be extremely comfortable looking at a chart, looking at a market, and having a fairly good view of what you think is likely to happen 8 times out of 10. But equally, you'll be equally as good and comfortable with just watching it and not trading it, because you understand that the context means that there's not an awful lot of edge in risking your capital and engaging your capital in trading at that specific time. And as long as you keep on seeing these things happen and you get pissed off, or you say, I should have traded it, or you get tempted to trade it, you're probably not experienced enough yet. Once you look at that, you're comfortable having a good view on what will likely happen. Watch that happen and not feel compelled to trade it, and not feel like you missed out, or not feel sorry or pissed off or whatever, because you didn't trade it, even though what you thought was going to happen happened, that probably means you're getting a lot more experience as a trader. You're getting a lot more detached, and you're progressing in your general life and trading journey. Does that make sense? Okay. Debbie, you're official timekeeper, okay? You know I tend to get carried away at times. Okay. Any other comments? Any other questions? Any other charts anybody's looking at? Any swing trades? Anything anybody's focused on? Well, I think there's all... The question is, do you think there's a good way to estimate a possible opening or range on the open, on the yes/no? I think you could come up with all kinds of educated guesses, right? But ultimately, who knows, right? And since there's not an awful lot of edge in trying to play for that, I would recommend focusing your brain power on things you can actually engage with, or views you can actually express, rather than, you know, other stuff. Yeah, remember, and as we said yesterday, as we said this morning, be careful, because what you'll see is most brokers are going to start to hike margin requirements, right? You have no idea how much they're going to hike them, so you can easily get in trouble, right? And again, they're not trying to squeeze you out. They're not being a pain. They're just trying to protect their own capital and your capital, right? Okay. I don't trade Asia at all. I focus on London and New York, or the first part of New York, but mainly London, right? I tend to be interested in New York as long as it's overlapping with London, and if there's some other big event. If not, in terms of Forex, you know. I know a lot of people are going to get pissed off, but, you know, if you want to, you know, to give you an analogy, if you want to play in Premier Division, right? If you want to play Champions League, and we're talking Forex, you trade London time, right? Anything outside is UEFA Cup or second division or third division. That's just the fact of life, right? And it's not based on anything particular, except that it's based on liquidity, right? Now, if you're trading futures, not Forex futures, but if you're trading, you know, if you're trading the S&P, if you're trading the NASDAQ, then that's a different ballgame, because of course, you know, the close is going to be interesting too. But why trade Euro and not 6E? You could trade 6E. There's nothing wrong with that. You know, 6E's got decent liquidity, right? There's no problem at all with trading 6E. Now, it'll depend for your particular case, for your particular account, for your particular commission structure, which one is going to be cheaper for you to trade. Okay, number one. And number two, also, Colin, it depends on how big you trade, right? Because 6C, effectively, you're trading one contract at a time, right? The difference of 6E as opposed to spot is that you can put on any size you want. You're not restricted by the contract size, okay? So you want to put in one lot, and then you want to say your standard lot size, even if you were trading spot, was equivalent to the notional of a 6E, right? If you want to add a quarter of your position, you can, right? 6E, you got to trade at full lot. So all of a sudden you're doubling that position, right? Of course, I'm not a huge fan of the micros, but that's the main reason. But there's nothing wrong in terms of liquidity with 6E at all, right? There's no problem. It's just a factor of specifically, you know, your commission structure, your commission schedule, how your broker deals with that, maybe tax rate depending on where you live. Spot versus the futures tax treatment might be different, and also the size you trade. Okay. Well, it depends on your size, Colin, right? Right? It depends on your size. So yes, but also don't forget there are a lot of different considerations. Not only that commission schedule, but also the tax treatment, right? Because depending on where you exactly call in size, but also depending on where you live, the tax treatment is different. Whether it could be different whether it's a futures contract or whether it's a spot contract, whether it's a CDF, whatever, right? CFD. So again, that's why I always say, and maybe in a boring fashion, is everybody always wants the definitive answer. So be careful of people that give you the definite answer. I don't think it's responsible. It's kind of like, you know, somebody says, hey, should I trade futures or spot? Right? And you get a bunch of guys go, no, man, futures, you got to trade futures. Oh, you got to trade spot. And then they'll have spend the day on a forum or on Twitter arguing why spot is better than the futures or why futures are better than spot, right? And nobody's thought to think about maybe they're both, one is better for each of them, right? You can't generalize your case. You know, you can't generalize. No, not everybody's the same. Everybody's different, right? So for some people, you know, also when you're talking about brokers, right? Some people get so obsessed about brokers. No, man, your brokers suck. You need to trade this broker. This is better. Well, who knows, right? Maybe you're with a broker because you're also trading different investment styles and it makes sense to be there even though you're paying larger commission or something else. Maybe you're posting a chart of that broker because you've got 3 different brokers because you need to diversify a very large account and that just happens to be the chart you post, right? It's never black or white, you know, there's a lot of different shades of gray. And be careful of people who try and paint the world black or white, because it's not, it usually isn't. Again, I'm going to stop there. If not, I'm going to start rambling. Any other questions, any other comments, anything anybody wants to look at? We're in a jukebox DJ mode. First come, first serve, anything, everything's on the table, right? CAD, we talked about CAD this morning in the first update. Do you have any specific question on CAD? Anything you want to look at specifically? Yeah, I mean, the general thing is this morning. Yeah, you know, it's tricky. I mean, I don't want to start to get into political discussion on Greece. Really, I think, you know, the situation for the people there is very sad. That's the only real fact, right? And that the situation is rapidly deteriorating. So no matter what has to be, I find it hard to believe anything is going to be agreed because the current bailout is no longer on the table, and you know, the harm caused by the week of capital controls has completely changed all the growth prospects, all the numbers. So we're far from being done deal, right? So all those people thinking that Monday, hey presto, everything's going to be solved. You know, I feel we're far, far away from having heard the last of this, right? Sure. Yeah, EGB, EURGBP, I don't think there's really anything too interesting to do there. Yeah, let me get some trades from the weekly. Let me get rid of this. You know, basically, we've been structurally short this for a gazillion years, for more than I can remember. Basically, quick one. You know, it starts pretty much in 2011. Big move back, cyclical move here, whole series of lower highs, 50 back gets triggered, we come back down, right? We extend the fib to the new level, we come back up, we get sold, holds twice, back into extension in this 123 target. That's the big move done, dusted. You know, we're talking about those 72s for ages. So right now, what's going on? You know, a lot of it is just also a play. If you think about it, you know, the situation in Europe, the situation in the UK, the fact that the UK most likely is going to have to raise rates before Europe, no matter which way you look at it. The fact that ECB is going to continue with QE, and for that to work, they're going to have a weaker euro. So everything is pointing to pressure down on this, right? Does that mean I'd want to sell the lows? Not really, because the last part of the move can be the most expensive. As far as I'm concerned, you know, whether you're short, this is the meat of the move, right? And the meat of the move is done. So the trade is a bit crowded, but I'd still be surprised if it doesn't find sellers at any kind of rally, right? Whether you're looking at that previous big low, but you know, you'd probably see sellers coming in. You could get a bit of a relief rally, but I would expect this to remain relatively offered across the board, also from a macro play, right? USDJPY, what's going on USDJPY? Let me get the chart. I haven't seen a USDJPY. What's happened? It seems like in the we've lost our USDJPY chart for some reason. I must have Tesla. No, I must have deleted that chart. That's very strange. So let's get back on USDJPY. So what's going on USDJPY? Let's get this up. USDJPY, right? We're hovering, some kind of broad weakness coming in here, and it's just choppy, right? It's extremely choppy. Now, what we had discussed actually, right? What we discussed is you had this big move down, right? And what we were using is we were using these lines to guide, okay? So the first line we had was a 78.6 retracement to the upside, okay? We had the 50 back to the downside, and we had the 61.8 in the middle. So they're not magical lines if you've just seen the chart on the blog. Those are the three lines, okay? Now, everybody following the blog knows that all the way back from, you know, 10s, 11s, we're talking about this as the biggest structural play to the long side. So, you know, no surprise for us really here. Now, what we were also talking about is basically that these 2020s were pivotal for action, and as long as we're holding above, we'd expect this to continue to press higher, right? So basically from a monthly point of view, this was our bull bear line, right? Back below the 120.20 from a monthly scenario, possibility of all the way back to the 111s, as long as we held above all the way back into the 131s. 130s are going to be offering some kind of pull. In terms of short-term moves, what we said is keep an eye on this little high print here back into 06, right? And you see how we took out stops and we quickly moved back below, right? We're holding below there. So when we start to see this kind of action, and as long as we're holding below, you know, all kinds of different bull flags can easily start to turn into downside channels. And especially if stuff starts to get very funky in Greece, what would you expect? Well, classical kind of thought process would be probably a bid coming in on the metals, right? You'd expect CHF buying, you'd expect JPY buying, right? So all things being equal, if you get that no vote, if you get a bit of panic and you see equity selling off, I would not be surprised to see this trade back into the 120.20s. The other thing, and we discussed that in the weeklies a while ago, and that we liked some structural plays to the short side on yen, was also because, you know, and on EJ is in the past weeks, we came out, we had Kuruda saying basically that he was comfortable with the yen there or a stronger yen, right? So what we liked, especially on that gap down, we liked to play this USDJPY to the downside, and we like to scalp that Euro CHF to the upside on that Monday, simply because the week before, you know, the SMB had been on the wire saying, hey guys, if anything funky happens in Greece and this goes down, we're going to be buying this hardcore, right? So those were the plays. So you do have to listen to the central banks. It doesn't pay to really try and fight them too much. Ultimately, they don't really all succeed in holding caps and stuff, but in the short term, it could be very, very painful. So right here, you know, if we start to get daily closes, weekly closes, etc., back below, above this whole 124.10s, yeah, but the failure to hold here and all the event risk here points to possible correction all the way back into the 120s kind of zone. Does that make sense? Yeah, exactly. Exactly. Okay. How are you doing for time, Debbie? I just don't want to make the recording too long. If not, it takes a gazillion years to upload on YouTube. Any other comments, any questions? More than happy to look at any chart, anything. Yeah, you know, it's not surprising as we get closer to the weekend to see Euro selling off, you know, because, you know, who really wants to hold Euro over the weekend, even if it's going to gap up? Who knows? But really, would you really want to hold long? You know, would you want to get aggressively levered long Euro, right? Or equities or whatever just ahead of the weekend? You know, it doesn't make an awful lot of sense. Keep in mind, there's always another trade. There's always another day, right? Exactly. Okay, guys, any other chart anybody wants to look at? Anything we've missed today? No, I won't be doing, well, it depends. I don't know, but most likely I will not be doing a Sunday update video on YouTube. We've got, I think, people who haven't been around. They're going to have plenty to catch up with the update we did this morning, the 2 Q&As and this. It's over 2 hours of content, so I think that should be enough to keep people busy. And the other thing, you know, there's not a lot that's going to change. You know, we'll have to wait for that. For the referendum. Monday will likely be a very volatile day. The open will be very volatile. So I don't think there's going to be an awful lot of edge in trying to record something, right? Hey, my pleasure, Dave. Yeah, happy you guys enjoyed it. You know, we'll try and do these when we can. Yeah, GBPAUD, you know, I think that's similar to a lot of those pairs. It's pretty much the same chart. You know, remember, it's always pretty much the same chart. GBPAUD. Do you have a specific question on GBPAUD? And we can review it if you have. You should do this when the market's moving. Well, it's a bit harder, right? It's a bit harder to do something like this on a day when the market is really moving. Yeah, simply for the fact that I need to trade, right? So, you know, taking, especially in prime time, taking 2 hours out of the trading day, that's kind of a lot for me to do, right? Yeah, here, you know, if you're looking at it on a monthly, what's happening, you see that we're starting to retrace pretty hardcore, right? So we've had a decent move up, and you see that the 50 back of that whole move up is further up. But what I would be looking in this case, especially with such an aggressive candle here, I'd be more partial to looking at this move for starters, right? So you see here, you've got a very, very big support zone coming up, right? So is there any reason for this to aggressively sell off? Most likely no, because GPB should probably continue to get a bid tone. It looks like, you know, GPB should be raising rates. RBA might be cutting rates. So structurally speaking, you know, it looks like it could have more room to go. The only thing is, you know, what are the risks? The risks is that, you know, with some kind of disappointment or the RBA, or if gold catches a bid, you know, you'd see some risk off coming in on cable and some profit taking, some bids coming in on Aussie. So clearly, you know, you have to respect this previous support, which acted as resistance, a very tricky zone in the past, and that's where we're hovering. So clearly, if I had to do anything, you know, I'd be looking to try and trim some longs here, to try and you know, trim some long exposure into the weekend, and understand that, you know, if anything, if this move is very, very good, very, very strong, you'll likely get some kind of a chance to come back to see this retrace back into some kind of previous resistance to act as support. Right? So it's going to be it's a bit tricky here. I think there's clearly more room to the upside, but as it's playing higher, I'd be cautious about longs here. Yeah, I know there are a lot of comments here, you know, about what happens if there's going to be a deal, if there's not going to be a deal. As we've been saying since yesterday, right, keep in mind what's going on. We're going to have this referendum. It's a big deal, right? Even though everything won't be solved, it's a really big deal. So everybody, whether you're looking for a no vote, whether you're looking for a yes vote, what are you going to do? Are you going to sit in a room in isolation, or are you going to try and push your stance, or your yes or no as to the very end? So that's what's likely going to happen. So don't be surprised to see the rhetoric continue and more stuff hitting the headlines. And as long as that happens, and as long as that picks up pace tomorrow, who cares? Because the market's closed. But what's very dangerous is right now, because, you know, the Forex market is open, right? But there's no liquidity, very little volumes, and most likely you'll get more ECB comments, Juncker comments, Dijsselbloem comments. You might get Cyprus is going to be on the wire. So keep in mind that there could be huge gyrations, and it would just be normal. So don't think you're going to try and get now on a 1 minute chart, try and scalp some moves. It's a sucker's play. You're going to, most likely 9 times out of 10, you're going to get in serious trouble, right? So there's not an awful lot of edge, even though there may be moves. But remember what we talked about, being comfortable seeing moves and not have to participate in the market, okay? There's not an awful lot of edge. You know, remember, it's not that hard, but you have to put yourself in a condition to succeed. You have to give yourself a chance to succeed. And that starts by not engaging when you've got very little edge, okay? Not looking for home runs, etc., etc., etc. Yeah, Dave, look at the first update. We talked about crude. I think there's not a big change from a broader structural level, but we reviewed it this morning, right? Okay. Exactly, Debbie. Exactly. So, you know, let's see what happens. Guys, again, stay safe. There's not an awful lot of edge looking for lottery tickets here into the end of the day. Priority is always to come back to fight another day. And, you know, there's, for those of you that missed it on the blog, there's an interesting post. Just go in the search and type like Friday musings, and it just gives you a bit of some points, some things, some key points to think of in terms of where the edge is, and in terms of trading. It's just a bit of food for thought, right? So you might want to look at that. And again, it's been a pleasure spending this part of the day with you guys. And again, just my way of paying it forward. Hope you guys enjoyed it. I'll post this on YouTube as soon as it loads. So again, guys, thanks for hanging with me for the day. I wish you guys an awesome weekend. I hope you guys have a great one. I wish you guys an awesome 4th of July. And let's hope we get some decent news out of Greece, decent news for the Greek population next week, some kind of a speedy resolution, and of course, most importantly, also some very good trading opportunities, right? Because that's what we're here for. Okay, guys. Again, thanks for flying with 50. I'll send out the recording, okay?